Good afternoon. Dear listeners, welcome to Šiaulių bankas meeting with investors. I'm Emilia from Nasdaq Vilnius and I'll be moderating today's event. We will start with a presentation from the management, which will be followed by the Q&A session. Please be informed that this webinar is being recorded and will be available for a rewatch. As always, I encourage every one of you to share your questions in the Q&A section at the bottom of your screen, and you can submit them either anonymously or with your name. With that said, I'm pleased to introduce today's presenters, Chief Executive Officer Vytautas Sinius and Chief Financial Officer Donatas Savickas. Dear guests, please, the floor is yours and good luck.
Dear investors, welcome to Šiaulių bankas webinar. Today we're going to present the fourth quarter of 22 and the whole 22 results. So let's get started and we can move to the slide number 3 on the presentation. So I would say we have very strong year with a 63.6 million net profit for the whole 2022. I would say historically best result. And despite that the growth rate compared to 21 was 15%, but if we drill slightly deeper, we see that the operating profit grew 30%. And if we would exclude one-offs, mainly from the 21, then we will have a rate of growth close to 40%. And if we compare the fourth quarter of 22 with the fourth quarter of 21, the growth would be 49%. So overall, I would say quarter was successful, and the whole year was also with a top-notch profit result of Šiaulių bankas looking from the very beginning of the bank's activities. From the soft factors, also important to mention that our customer service was recognized again as best in the market. So mainly we're number 1 in the branch customer service and top 3 in the contact center. So I would say I'm really happy with the constant and continuous high level of service of the customers in all the channels. If we touch the key performance indicators, also worth mentioning that all of them above the targets set for 22. So the return on equity above 15%. So just to remind our long-term ambition to be in the range of 15%. So with this year, we've reached that target. Cost to income ratio 43%, also a bit better than targeted figure. Capital adequacy ratio at the 16.1, and that's the only indicator that is lower than our initial target. But due to the higher growth rate, we have a slightly lower capital adequacy ratio. But of course, this ratio is above the minimum requirements from the regulator with needed buffers. Cost of risk, also the year was less exposed to the new provisions compared to our initial targets. So we stand at 0.2% instead of 0.4%. And also worth mentioning that Šiaulių bankas entered in the last quarter of 22 into the M&A transaction. And that's one of the key focus areas of the bank of this year and few years in the future as well, to fulfill all the possible synergies out of this transactions. So the next slide would be about the goals and indications of 2023. And again, I would say they are rather ambitious, knowing that the major M&A transaction is continuous. So indication is for the return on average equity is 14%. Cost to income ratio, again, below 47%. Capital adequacy ratio 18.6, and that's quite a visible increase compared to the previous indication of 17% for 2022. And the reason for that is the still growing requirements for the high capital adequacy ratio, for some additional buffers that were introduced by the Bank of Lithuania from this year. So there's a number of elements that needs to have a higher capital adequacy ratio target. And also cost of risk, slightly higher than 2022 actual figures, but still I would say rather low. That comes from our views for 23. The other part, which is for the bank's focus, as already mentioned, retail business merger with parts of retail business. And despite that the target is to complete the transaction as planned, closing in the end of this year, we're raising much higher targets for this transformation. So we are willing to substantially review our strategy for the next period of time, so from 2024 to 26, and also to review substantially the business model as such by strengthening retail banking activities and making the new group covering more business areas. So with this transaction, we're expanding our client proposition. The good news that the formal steps that were needed to pass by after the signing of agreement are moving smoothly, and we've already executed some steps in this process. So the EGMs of both companies has been called, and decision has been passed. Also, Competition Council permission has been received, and the new asset management company was established, and that company starts to be the platform for further integration of retail business into Šiaulių bankas group. So that's about goals. We are committed to both continue with current business and to generate rather decent return in this year, despite that challenges making such an M&A transaction, and to fulfill all the potentials that that transaction can give for our combined group. If we would move to the macroeconomic situation update as a platform on which we are operating in Lithuania, mainly that's our focus. So we can see that the fourth quarter was rather weak in Lithuania, and the results were recorded as a decrease by 1.7% compared to the third quarter. Nevertheless, the overall result of 2.2%, I would say, is rather positive for Lithuanian economy. And the recent revaluations that has been made by Central Bank of Lithuania, which increased the GDP projections from 0.9 to 1.3, shows that there's a good dynamics looking forward, and we believe that 23 would be still, despite all the turbulence in the markets, would be rather successful year, would be rather good year. Also worth mentioning that if we take a bit longer perspective on a GDP development, we can observe that Lithuania performed above EU average and Eurozone average. So you see in the graph that despite that the currently Lithuania's GDP is slightly lower than Eurozone, nevertheless, if we would take a bit longer period, we see that this is not the conclusion that this year is low compared to the longer period of time when Lithuania performed much better than EU on average. So the good thing, I would say, that inflation in Lithuania is starting to decelerate, and we are expecting that in 23 it will be below 10%. And I would say that another good thing, I would say, that the higher energy prices that has been recorded mainly in the fourth quarter of 22 was kind of tangible threat for Lithuanian business competitiveness in the market. But when the situation normalizes in the energy sector, I would say the projections and optimism is higher than the development in the business sector that consumes energy, and which is part of important elements in the costs, would continue for Lithuanian business to stay on the competitive edge. And as I said, from the bank's perspective, despite that we see some challenges, I would say that in our view, the 23 still could be quite good year from looking from the bank's perspective. Despite, of course, that there is some threats of short-term potential issues with a higher Euribor for some debtors that are more leveraged. If we will move further to the loan portfolio dynamics, worth mentioning that this is really good year on all business segments, and we observe the growth in all of them. So the 5% growth on a quarterly basis and 25% growth in the whole year. So I would say it's rather strong development. Of course, the market also was active. And as you can see, that 21% growth of the whole market is recorded in 22. So I would say that's probably one of the historical years in a banking market in the recent past with such a growth. Of course, we should remember that we had quite difficult years of a growth, taking the pandemic and the years before as well. In order to generate that growth, we've signed quite a big amount of loans on a volume side. So 1.5 billion euros new agreements has been signed with the current clients and with the new ones. And that's an increase of 28%. And with that development, our market share continues to grow, and on the whole loan book, we've reached 9.2% market share. If to mention about year 2023, so we would assume in the range of 10% plus growth. And also worth mentioning that increasing base rate would also support the income generation of the bank. If we would be more specific about business segments, so corporate financing was growing by 4% in the fourth quarter and 18% year on year. Important element in this period of time that the credit quality remained strong and continued to NPLs continued to decline. So the level of NPLs declined to 58 million euros, and that would be minus 10% compared to 21 to the year 21. And as I said, due to the rather active development overall in the markets on the corporate financing, we only kept our market share with a 12% market share in the markets on the corporate side. On the graph, you see quite an active development of interest rate, mainly to Euribor development, since our mainly all loans are in the flexible interest rate. Therefore, the Euribor directly reflected on the newly generated agreements. Mortgages and consumer financing, next part of information. So the mortgage loans started to accelerate during the last quarter, the quarter number 4. Nevertheless, the year was, I would say, extremely successful. And in our history, we've created the most new loans in a mortgage segment. So 255 million of new contracts were signed, and that's 30% higher than in 21. And the fourth quarter was probably the one that was different compared to the previous quarter trend. The second and third quarter was not that natural. There was a strong movement of the new agreements. Therefore, this slowed down in the fourth quarter and the beginning of first quarter of 23. I would say it's rather natural that some people are willing to wait and see how the macro situation will develop, how the personal economy will develop. However, we see the good signs starting from the second part of January, and also observing that on February, that new applications for mortgages are applying and they're starting to rise. Probably the level of sales will not be that active as where the speed of development will not be that active as in 22. However, we see that some of the parts of Lithuania developing rather fastly. Therefore, we expect that the continuous need for new dwellings and new mortgage loans will continue. And also, interest rate also reflected on the mortgage lending as well, since interest rate is also on a floating base. With consumer financing, we see again successful year with 34% growth. So comparing with 21, we've experienced much faster growth on consumer lending. And in order to reach that, we've needed to generate new sales of 190 million euros. Also, our market share has increased after that to 12.1%. And interest yield, I would say, remains rather flat already a few quarters. And due to the tough competition in the sector, the interest rates are not growing. So daily banking covers mainly all net fee and commission income. And I would also describe it as a solid result for 2022, with 9% growth up to 18.7 million euros. Naturally, it's dispersed among different service categories. And good to mention that after pandemic period, we returned to the growth mainly in all fee lines. Some of them continues to grow faster, like security brokerage, since a number of clients are willing to move from traditional savings instruments to more advanced. Nevertheless, worth mentioning that this deposit market is becoming more and more active due to the higher interest rate provided for the deposits. Therefore, I would say this period will be interesting for all investors, those who are willing to be more on a conservative side and those who are more aggressive. So the possibilities of saving and investing would be much broader compared to the previous period when the deposits were interest rates were close to zero. I'm also happy to mention about development on the service plans sales for the private individuals. So we've reached 188,000 clients that are using us as a home bank for their main needs in the daily banking, and that is a growth of 9%. Again, interest for the credit cards is also active, 7% growth on a quarterly basis and 33% on a yearly basis. So rather significant development. some clients migrating from debit cards to credit, some are taking as a second card, so there's a different needs, but the trend is I'll say rather positive. And our continuous development of digital solutions. So time to time, we're presenting new features, and we will continue to do so, since more and more clients willing to have only online solutions, and that's where we are also moving. So with the message that our largest customer network is also being able to provide the best service quality in the market, I'm proud with that, and we'll be happy to forward the words to Donatas to continue with the presentation.
Thank you, Vytautas. And I would good afternoon, dear investors. And Vytautas talk more about income side of Šiaulių bankas activity. I will start my part from expenses. And in order to make good and sustainable earnings, the bank has to invest and spend adequate amounts into people, into the staff, into the systems, in order to be sustainable in the long term. And during 2022, we managed to combine these both parts successfully, and reaching very good cost-to-income ratio. And I will provide some few insights regarding expenses side. So during the year, operating expenses increased by 21%, and mainly consists of two blocks. This means salary expenses, staff, and other operating expenses. Talking about salaries, increase of 17% was caused by annual salary review that we are doing each year. Also by planned and implemented staff number of staff increase, which required by the growth of the bank and becoming more sophisticated, and new systems and risk management compliance systems are developed according to the latest requirements. Of course, it was caused by one-off severance expenses that was in the third quarter of last year. Talking about the other operating expenses, which grew by 27% in last year, it should be mentioned that the main part of these expenses is IT-related expenses. Almost 40% of this part is IT expenses, and last year they grew up to 10 million euros. And this trend will continue because the banking, as you know, is more IT-related business, and without good and adequate systems, no sustainable results could be achieved. In talking, if you let's spend few minutes still in the previous slide. If we zoom into the fourth quarter, we see the trend that traditional trend that operational expenses grew by the year end, and it was not exception last year actually, and but it's this fluctuation is we accept that, and it went according to our plans. Yeah, let's move on the next slide about funding and liquidity. And if I remember correctly, last webinar I mentioned that we reached probably the lowest dot in our cost of funding in deposits, and it actually is that it started to grow. and I expect the further more significant growth will follow, because we saw immediate impact from the rising Euribor rates in the second half of last year, but it was some delay in rising cost of funding. And proactive steps that Šiaulių bankas took regarding deposit interest rate led the term deposit portfolio to grow by 19% in the fourth quarter alone. But these proactive steps means more active work with potential depositors and also more attractive interest rates for them. That translates into expenses for the bank. And as the bank grows, we need funding increase as well, because right now our loan to deposit ratio is close to optimum level. Therefore, in the future, we need as much we grow in assets, the similar amount should be grown in the funding side and mainly in the deposit side. And we make preference to our local market, despite the fact that we have access to the international retail markets as well, but we use them as an additional source of funding, but not the main one. It should be mentioned also that in the first quarter, bank successfully completed tap issue of 4 years bond issue. This bond issue was MREL eligible funding, and that allows us to meet the requirements set by single resolution board. Yeah, we can move on to the next very important topic, capital and risk management. When I said the very important topic is, I meant capital more, because the situation with the credit risk management, Vytautas already mentioned that the NPE ratio is continued to decline, both in percentage terms of portfolio and in absolute figures as well. Again, it's we prepare ourselves mentally and not only mentally to the coming negative impact from the worsening economic situation, but so far we don't see any visible signs that already implementing into reality. And the cost of risk last year was 0.2%, and for the next year we forecast very similar, slightly higher cost of risk ratio. When we talk about capital level, so you see the actual development of our capital adequacy ratio, both regulatory and including interim profit. Right now, we know what profit we earn, but as it is not verified and confirmed by audit company, we cannot include into our regulatory capital adequacy ratio calculation. But after we include, by the end of March, our capital adequacy ratio will be 18.8%. But for the end of next year, for this year, 2023, we have to reach targeted minimal capital level of 18.6%. This is mainly due to the requirements set by regulator, which introduce new extra buffers. And also we have another kind of regulator, single resolution board, that also had set of requirements, and in order to meet them, we have to increase our capital adequacy ratio as well. And in order to achieve this targeted capital adequacy ratio level, bank has plans to issue different capital instruments in 2023, and not limiting ourselves only to tier 1 instruments. Yeah, probably we can move on. And this last traditional slide, where we present the development of our share price. It could be mentioned that we see the upward trend since end of September last year, when share price was 54 cents. Right now we stand at 75 cents, and right now market price is almost equal to the book value of the price. And when we look at the share price development during 2022, we see that share price dropped by 10%. And of course, we all remember that the initial shock was caused by the war in Ukraine, which was started by Russia. And after that, it was several waves of recovery and again, wave of pessimism. But if we compare our development of decrease by 10%, and we compare with the peer group, similar banks which has similar profile as Šiaulių bankas, we see that our development was slightly better, because the group of banks that we follow closely, their share price dropped by 22%. I mentioned that our share price is right now 75 cents, and according to the analysts that following bank and making projections, so we are still below their suggested price, but the difference that was in the last few quarters is decreasing. That we are, how to say, our actual share price is approaching to these targets that were forecasted by analysts. Again, number of shareholders is increasing, and we are close to 20,000, but it's still not ultimate figure, because some shareholders are hiding behind intermediary accounts, and they are not, how to say, disclosing themselves for us as such. So we can assume that our number of shareholders is in the range of 20,000. That's it from my side, and probably right now it's a good time to start Q&A session.
Thank you very much for the presentation. And indeed, now we will proceed with the Q&A part. But before that, I would like to remind all the attendees that you are welcome to send in your questions in the Q&A box of your screen, and I will voice them out. So let's begin. And the first question would be as following. Could you please explain the transaction with Invalda and its strategic and financial side? Impact on net profit. What is the projected benefit to current shareholders due to this transaction? Thank you.
Yes, thank you for the question. So yeah, as we described earlier about this transaction, that it has some strategic pattern in this M&A deal, and with that, I would say strategically we become the full palette universal banking on a private client's side. So we would have, let's say, full scope of daily economy solutions, investment and savings products, as well as the financing solutions. So with that, I would say we are covering possibility to provide all services to the retail clients. From financial side, definitely all that type of transactions required some additional investments and costs in the short term, and all the integration work has already started, and some of that already been recorded in 2022, and we see that would continue in 23. But nevertheless, we expect that with this transaction, we not only increase our top line, but also the net profit in a medium term will grow and will bring the needed return on equity, since mainly out of that transaction we would projecting to increase the net fee commission income. Therefore, even another target would be reached, that more diversified income of Šiaulių bankas and more diversified business model will continue to be developed. And the benefit for the current shareholders, with probably slightly smaller percentage part of a share, the current shareholders would receive a larger pie in the future. So the bank would be larger with better profit generation and more diversified generation in the future.
Thank you very much for your answer. What does Šiaulių bankas think of the recent comments that the profits of Lithuanian banks are going to be taxed? Thank you.
Yeah, probably that's a more political question, and politicians are probably the best to ask and to deal with that. But from the bank's perspective, I would say that worth to remind that we, as an industry, already have exceptional higher profit tax. Instead of 15%, we're paying 20%. So I think this is also a substantial difference compared to the other sectors. The other comment, I would say that knowing the part of the additional result coming from the interest rate development, historically negative, currently positive, but in the medium and longer term, that mainly comes to the net results. And I would say the key answer in my understanding of the situation is the started higher interest rates on the deposit side. And I could see that, I could mention that Šiaulių bankas has showed some leadership in that field, and we were first who started to raise more substantially interest rate for depositors and continue to do so. And I would say currently we're providing one of the most competitive interest rate in the market, and that will normalize the situation in the future. So I would say that's a temporary situation, and that will not continue like that some years in the future.
Thank you very much. What will the dividend rate be for the next payout? Any plans for share buybacks in 2023?
Yeah, also I could take this question. So yeah, we're coming to the term when we need to propose what kind of dividend rate would be applied for shareholders' decision this year. So firstly, worth mentioning that there's a number of factors influencing that. So one of them is our active growth last year, and we continue to foresee growth opportunities in 2023 as well. So therefore, we need to allocate needed capital for that, as well as we're described in our presentation that the increase of the capital buffers also is needed to have sufficient reserves in the capital for 2023. But with that have said, I would say there's less and less obstacles seeing from the management point of view that we could not follow our dividend policy. So we committed once the situation is normal, there's no major risks in front of us. We see that we have rather strong incentives to follow our dividend policy, and nearly in the short term we'll be more precise presenting the propositions for the shareholder decisions that will be at the end of March. And talking about buybacks, I would say this is the second alternative to the dividend. So we mainly put an emphasis to the dividend payout. And I would say there's slightly less arguments for the buybacks, unless if we will consider that will be a very small part of that as a test case. But in the current environment, as of now, we don't see that much intentions to go for buybacks.
Thank you. What are the biggest challenges for Šiaulių bankas in 2023? Based on your forecast, how much will credit cost increase, and what are the most vulnerable sectors in your corporate bank loan? Thank you.
I will take that question. So talking about challenges, I would say that the biggest challenges is the adverse development in macroeconomic situation. That includes different factors, namely outcome in war in Ukraine, inflation, interest rate environment impact to the real economy. These are the main from macroeconomic group of possible challenges. Also, it should be mentioned that it's bigger important development in the bank history is this merger operation. So in order to make it properly and ensure that we will get the most of it in the coming years. So it's also a big issue, and bank spends very big efforts and time in order to prepare to this closing of this transaction smoothly, and in order to start operations from the beginning of next year since day one. So this is about challenges. Another part of this question is credit cost increase. So I mentioned already, but I could repeat that we project in our budget cost of risk in the range of 0.3%, slight increase compared to previous year. And also we made similar projections in the 2022, but luckily we were more cautious in our budget than the reality shows. So it could be the case this year as well, but nobody knows. Talking about most vulnerable sectors in our corporate loan book, all loans and sectors are adequately provisioned, but when we analyze by different sectors, I probably could mention the hotels and catering sector, which suffered for several consecutive years, first due to the COVID, and then despite the COVID impact decreased or diminished at all, the tourism that mainly impact to the development of this sector didn't came back to the previous levels because of foreigners imagine how Lithuania is dangerous due to, again, this war in Ukraine. This could be mentioned as vulnerable sectors. And of course, these traditional sectors, real estate and construction, but nothing new. And we pay close attention to that sectors for several years, many years already. So therefore, probably that's it, what could be mentioned in this respect. Thank you.
Thank you very much. Let's proceed. The next question is quite long, so please bear with me. The loan portfolio increased by 25% on a year-to-year basis, which is about 10% more growth than the Lithuanian competitors have. This tendency is visible for a couple of years now. Also, this resulted in a growth of net interest income by 32% year-to-year. However, even if competitors have lower portfolio growth, they still manage to augment their interest income by 70 to 80% on a yearly basis. I'm coming down to the questions. So what is the reason for this big difference? And do you think that Šiaulių bankas will catch up with these interest income growth rates in the near future?
I will take that question as well. It's a long question, but it's a good one, and I see the person who asked this question was, how to say, made a good analysis of Šiaulių Bank development and also how the competitors doing. So also we are following not only ourselves, we are following how competitors act. And first of all, we are happy that our net interest income exceeded our loan portfolio growth last year. And but probably it was caused by the fact that we enjoy this gap between rising interest rate impact to assets earlier than impact expected to the cost of funding. Therefore, this net interest income grew more. But I suppose that is a temporary effect for all banks, including Šiaulių bankas. If we try to find the reasons why the growth rate of net interest income of Šiaulių bankas compared to our other banks, let's say those who grew by 70 or 80%. So mainly the answer lies in analysis. What was the impact of negative interest rate to those banks which were not balanced? They have over funding, and this extra funds they place in different instruments with central bank, and they pay interest expenses for them. It was the case in 2021 and in the beginning of 2022. But when the interest rate environment began to change, they immediately start to benefiting from that change. And this very low base let them show temporarily impressive growth rates in 2022. And I see in the future these growth rates will be comparable for all banks, despite the difference what we saw in 2022. That would be my answer.
Thank you very much for your answer. Let's continue. The bank has now reached more than 210 million euros of non-distributed profits, and this amount keeps growing. Is the bank planning to utilize it to expand the business or invest? And if so, when?
Yeah. Bank is utilizing and investing these funds, despite that they lay in the line called undistributed profits. So in order to fund the growth of the bank that the bank is doing successfully for the last few years, and especially last year was significant when we grew loan portfolio by 25%, we need to have capital. And it doesn't matter in which line they lies, whether it's registered capital or non-distributed profits. And when I talk about the capital levels that we need to maintain in 2023, it says that we don't have extra not utilized capital currently, and we need to combine all our growth rate with the capital development and also a dividend payout according to our dividend policy, in order to use the opportunity to grow and also to keep our investors happy.
Thank you. Could you please comment on how many space cards have you sold since their launch?
Yeah, thanks for the question. Nicely formulated one about launching space cards. By the way, we launched not only the space card, but we also launched the branch in space, and that was a marketing campaign starting this space cards sales. So we set the limited edition number for those cards, so it's 5,000 cards. So we're very close to reaching this 5,000 limited figure, and that's an exceptional type of a card. So we are very close to the finalizing our proposition to the client. So those who are interested, so being in a hurry due to the potential sold out. And just to remind, those cards has, besides the other ones, the business lounge for the travelers as important feature, and also additional cash out, which is comparably higher than the other cards has in the market. So it's going well, I would say, rather a good proposition. Thanks.
Thank you very much. Another listener is congratulating the company on the strong finish to the year, and asks, do I understand correctly that you expect to grow your loan book by at least 10% this year? If so, what specific sectors do you expect to show robust demand for loans? Energy, for instance. Thank you very much.
Yeah, good question too. Yeah, in our view that most of that 10% growth we still see on a private side. Consumer lending, double-digit, mortgages as well. So the consumer lending mainly due to some of our agreements with partners, with the clients that we partner that are providing the consumer financing for the clients that are acquiring the goods. On the business side, I would say we still feel quite solid pipeline from our current customer base, and that's rather diversified, both even real estate continued projects that require additional financing, as well as different industrial product clients that continues to invest. But I would not call one kind of pattern. So mainly all clients that are exposed to the growth, even in the year 23, which is still uncertain and probably for many business clients and unpredictable. But some of them have clear plan of a continuous business development, and they need additional financing. So we are ready for that.
Thank you very much. We still have quite a few questions remaining, so please stay with us. And the next question would be, as the deposit war among banks is heating up, where do you expect your net interest margin to land in 2023?
I can share the insight that we made when making budget for this year. It was the end of December, and the main assumption was that we will come back to the net interest margin what we had for loan portfolio back to 4%, after we temporarily enjoyed in the second quarter peak of net interest margin of 4.5, 4.7% due to this mismatch of repricing in deposits and assets and loans. That's we will come back to 4% net interest margin.
Thank you very much. Could you please indicate how many people you expect to have by the end of the year?
Okay, yeah, possible to answer that question as well. So currently we are slightly above 800 people in current Šiaulių bankas group, but after transaction we expect to be in the range of 1,000. So nice milestone to be reached at the end of this year.
Thank you. Another attendee is congratulating you with the strong results and asks, could you please give more color regarding the increase in Pillar 2 requirement for 2023?
I'll take that question, but probably not much color I will add. Probably our colleagues from risk division would be more proper person to answer this question with regarding more colors, but my review and my impression, what I get from the regulator. So after they made this annual SREP result, and after we became, how to say, already among these supervised banks, not after first few years, 2 years were, how to say, caused by COVID, affected by that. So, and if we compare our P2R ratio with our peer group, we came to the average range of that buffer. Before when we entered into that group, so we had slightly less than average buffer. So probably they harmonized with the remaining banks. So because no significant comments or regarding the quality of Šiaulių bankas risk management or governance issues were not mentioned.
Thank you for your answer. How do you assess the current competition in Lithuanian banking market? Does Šiaulių bankas intend to take a larger share of the banking market in Lithuania after the merger with INVL? If so, what is the target?
Yeah, so I would say that the competition market is rather healthy. Overall, of course, we need to drill to the different segments and probably describe more specifically, but overall, I would say the banking sector is rather healthy. It's not too aggressive. It's used to be in the history periods when we used to have some kind of price wars. Now it's a bit more balanced. Therefore, we see the opportunity to strengthening competition in the particular sectors, as I mentioned, in retail, and continuing our strong position in SME and corporate financing as well. Therefore, with our future development, I would say we are willing to increase the level of competition in the market. And definitely we see an opportunity with the merger of retail business of INVL to increase our position in the markets. And currently, as we mentioned, we are working on the reviewed strategy of the bank after transforming business model. And we see the quite visible ambition to come to at least number 3 player in the market. Since we have, I would say, rather good potential as very focused player in the markets. So probably we are the single one of that size that could treat purely a local bank with competitive knowledge of the market and the services that are needed here. So we see a potential to compete here for the clients and to reach higher market share after this transaction.
Thank you very much. Could you please elaborate about what instruments you are planning to issue to strengthen capital in 2023? Thank you.
You first of all, in order to to say, finance this acquisition of retail business from Invalda. So it was announced that we were going to issue capital, registered capital, first tier 1 instrument, and also options for tier 2 capital is also under consideration during this year. This is short elaboration of this.
Thank you. Could you please briefly describe the short-term 1-year outlook in terms of term deposit interest rates?
Actual interest, we made assumptions on how much we'll pay by the end of this year for 1 year for different maturities deposits, but probably the better answer would be our assumptions of how cost of funding will develop. So the trend is that we will reach cost of funding in the range of 1.8% compared to the level of 0.5% what we had by the end of last year. So quite significant increase.
Thank you. The next question would be, as the capital buffer is now much higher, there is no room to pay out any dividends?
No, I would say despite that the capital requirement increase, we see an opportunity of paying dividends from accumulated profit in 2022. So I think, as I described before, that we need to, take into account number of impacts that are influencing the size of potential dividends, the buffers, the growth rate. But still, as I mentioned before, that we're still an opportunity of being at the proposition of the dividends. But let's wait what kind of proposition that would be in the nearest future.
Thank you very much. And it seems that the last question for today is, how will you manage regulatory capital now that CAR requirement is significantly higher?
Yeah, I'll probably answered this question already in the previous ones, but I could repeat shortly that profitable activity that we are planning, and we have a possibility to include the interim profit after it is reviewed by the external auditor. So it is an option in case of necessity. And also the issue of capital instruments that I mentioned, both capital emission and the tier 2 instruments. So this combination will give us possibility to combine, possibility to grow and still follow this dividend policy that we have in place.
Thank you very much. And we have received one more question. So why is the yield on mortgage portfolio still only 2.8%? Isn't that a floating rate loan book?
Yes, it is a floating rate loan, but that's starting to grow. So in the third quarter, it was 2.5%. In the fourth quarter, it's 2.8%. And if you see new sales in the presentation, it went up from 2.2% to 4.3%. So in the near future, that will start to continue to grow.
Thank you very much. As all the questions are answered, on behalf of Šiaulių bankas and Nasdaq Vilnius, thank you everyone for joining us today. Dear management, thank you for the presentation and a very long Q&A discussion. So have a good evening, everyone, and goodbye.
Thank you. Goodbye.